know what a tax audit is? Or have you ever experienced one yourself? Well, don't worry. Today our group is here to guide you through it, while we help Sarah get ready for her very first tax audit. Meet Sarah, a fresh accounting executive. Today, her boss tells her to be ready to getting a visit from tax auditors. Nervous but curious, Sarah decides to learn everything she can about tax audits. Guys, let us help Sarah.
Hi Sarah, today I want to explain what the tax audit. A tax audit is an examination of taxpayers' business accounts and financial affairs to ascertain that tax reported and paid are correct are in compliance with tax law and regulation. The IRB, Inland Revenue Board, conduct a tax audit in Malaysia as a review process to ensure that business accurately report their income and calculate their tax based on the income tax return form. The tax audit included examining financial record, verifying expenses and revenue, and recalculating taxes. Other than that, tax audit is all the right amount of tax should be calculated and amount of income should be declared. And lastly, a tax audit is a tax must be paid in accordance with tax law and regulation. Next, Sarah, I want to explain the objective of tax audit. The main objective of tax audit is encourage voluntary compliance with the tax law and regulation, and to ensure that a highest tax compliance rate is achieved under the SAS self-assessment system. In this regard, the audit officer is required to ensure the correct amount of income has been reported and the right amount of tax has been paid in accordance with the tax law and regulation. For the purpose of achieving voluntary compliance, the tax audit activity is one of the measures undertaken by RRBM to educate and create awareness of taxpayers toward their right and responsibilities under the provision of the ITA. The last part of introduction, a tax audit is a year assessment covered. Generally, a tax audit cover a period of 3 years of assessment determined in accordance with the audit focus criteria of the department. However, the tax audit may be extended to cover a period up to 5 years of assessment, pursuant to the issues uncovered during an audit. Further, this 5 years time limit is not applicable to cases involving fraud and tax evasion, whether intentional or unintentional.
Hi Sarah, I'm Siti Ramaika binti Makrani. I one of accountant in my company BYD Electronic. By the way, I will explain to you regarding the tax audit framework. Okay, the tax audit framework is issued by the IRBM to ensure that tax audits is carried out in a fair, transparent and impartial manner. The framework aims to First, assist audit officer to carry out their tasks efficiently and effectively. Second, assist taxpayers in fulfilling their obligation. Third, for the general audit, refer to rangka kerja audit, which is cukai pendapatan and majikan 2025 on at page 4 and 5. You may refer this. Then for the comprehensive audit, you may refer to rangka kerja audit cukai pendapatan and majikan 2025 page 5 and 6. By the way, Sarah, I hope this my explanation will help you to settle your work in tax audit.
So Sarah, now let me explain to you briefly about the upcoming field audit. Do you know what is field audit? A field audit is a tax examination conducted by Inland Revenue Board of Malaysia (IRBM) that involves reviewing of taxpayers' business record at their premises. In case of sole proprietorship or partnership, if their business record are incomplete, IRBM will review their non-business record such as personal bank statement or credit card statement. But don't worry, the tax office will always give you 14 days notice before coming for an audit, so you will have plenty of time to get everything in order. Here are several selection criteria on tax audit. Let's see one by one. First, location. Companies in major cities like Kuala Lumpur, Penang or Johor Bahru would be selected for tax audit relatively higher than other cities because this area have more listed company and higher economic activity. Second, specific industry. High-risk industry like property development, healthcare and palm oil face more audits due to complex transactions and frequent compliance issues. Next, third-party information. RIBM may audit the company if they find any discrepancy in their income or expenses while checking another taxpayer record, like your supplier or your client. Then, the fourth is risk analysis. RIBM will compare the company financial data like turnover or profit to industry average. If the numbers stand out, the company is more likely to be audited. Last one, taxpayer previous record. Taxpayer who has the habit of late submission of return or non-submission of return would have higher risk of being selected for tax audit. Here's how IRBM will implement the tax audit. It starts with first initial plan. The audit process begins with an initial audit plan. Here, cases are selected based on the risk assessment. You will receive either a general review request for basic verification or a comprehensive review requiring full documentation submission. The tax authority may request documents from your company, which must respond within 14 days. Failure to comply can lead to penalties or additional tax assessment. Audit visit. For the comprehensive review, expect either an office audit at IRBM branches, which typically up to 1 to 2 days, or a field visit to your business location with 14 days advance notice. During the visit, field officer must present first official photo ID badge and sign authorization letters. Always verify this before granting access to your record. Next, for duration of field audit. The duration of field audit visit typically lasts 1 to 3 days but can extend for complex cases. Factors like business size, transaction complexity, record keeping quality, and your corporation influence the timeline, audit duration, and outcome. Next is record examination. Record examination is critical. During the audit, officers will examine all the financial record, including accounting books, bank statement, payroll records, asset purchase documentation, and electronic data. They may make copies of the document too. You must provide a complete record for past 7 years Failure to do so can result in penalties up to 300,000 ringgit. Okay, now audit settlement. After review, IRBM will issue audit finding within 90 days for standard cases and 240 days for financial institution. When you receive a letter with their finding, you can either agree and you will pay for any extra tax, or if you disagree, you may object within 18 days with supporting evidence before the final assessment. Now it is about voluntary disclosure. If you realize you underpaid tax, voluntary disclosure allow correction before an audit begins. You must submit complete amended returns with supporting document, and this can reduce the penalty. But you must act fast. This option will disappear once audit notice are issued.
All right. Now that Sarah understands the basics of a tax audit, it's important for her and all of us to know the rights and responsibilities of everyone involved, especially during a field audit. Let us start with the audit officer. A good audit officer must be professional, honest, and fair, always be ready to explain the purpose of the audit and the rights of the taxpayer, and they never should have personal or financial interest in the business being audited. Besides, they are not allowed to abuse their power, recommend a specific tax agent, or accept gift or any payments. Taxpayer like Sarah, as a taxpayer, we should be cooperative, honest, and respectful, ready to provide full and accurate information, and offer reasonable assistance during the audit process. Lastly, for the tax agent, a tax agent must be knowledgeable, trustworthy, and act with integrity. Be transparent with both the taxpayer and the IRBM, and never delay the process or give misleading advice. Like everyone else, they must never misuse information, accept bribes, or give gift to the auditors. As part of understanding our rights and responsibilities, it's also important to recognize the powers given to the Director General of Inland Revenue. Especially during a tax audit, the DG is legally empowered to request and review specific documents to ensure compliance. Under Section 78, the DG has the power to call for specific tax return and the production of books or records. Section 79 allows the DG to request statements of bank accounts for verification purpose. If necessary, Section 80 gives the DG the authority to such premise with proper approval to secure relevant audit information. In addition, Section 81 empowers the DG to call for any information from the taxpayers or even third parties. According to Section 82, the DG can require taxpayers to keep proper records and issue receipts for transactions. Finally, under Section 140, the DG is granted the power to counteract any form of legal tax avoidance that appears suspicious. These powers help ensure that audit process is not only true and fair, but also aligned with national tax law. During a tax audit, if it's found that a taxpayer has understated or omitted income, a penalty will be imposed under subsection 113, subsection 2, or paragraph 44b, subsection 7, subsection b of the Income Tax Act. The standard penalty is 100% of the tax undercharged. However, the Director General of Inland Revenue has the discretion to reduce the penalty, especially for a first-time offense to 45%. Depending on the circumstances, this emphasizes the importance of accurate reporting and full disclosure at all times.
After learning about tax audits, Sarah is now well prepared. She welcomes the tax auditor with confidence and provides all the necessary documents. The auditor reviews the records, and everything looks good. Great job, Sarah! Remember, a tax audit isn't scary if you're honest and prepared. Be like Sarah, smart, calm, and ready.